Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to be with you guys this morning, and in fact, I have very interesting and simple setups that we are going to be using to guide our independent trading decisions for today. So I encourage you to grab some bottle of water, buckle up, and let's get ready to kickstart the session. But before we do, let's quickly confirm that we are on the same page here. So if you can see my screen and you can hear my voice clearly, let me know in the comment section by typing in I. Your eyes will let me know that we are very much good to go this morning. So let's see the comments rolling in right now. Okay, let's see what we have here. I can see comments from 99621. Good morning to you. Thank you very much. 2471. Um, okay, 1551964. Ost Block, thank you very much. Alex MH93, good morning to you. Thank you very much. Hello, Carrie. Good morning to you, and glad to have you around with us this morning. So it's on this note I welcome you all once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host where we shall be evaluating the financial market using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical movement of price action. Well, the last 24 hours has been quite interesting, though we've been doing pretty well anyways, both on the US All Spot, the US Tech 100. The GBPUSD has been a little bit funny in the meantime, but we're still maintaining our momentum on that one too as well. It has been really a very good start to the week for us here in this community, and in fact, we shall be reviewing our position in a moment as while we also anticipate new opportunities ahead of the New York session. And for those who are joining us for the first time, you are highly welcome on board. I'm very grateful and glad to have you around with us. And you might be asking, what is it that we are doing here? Well, as technical traders, we come together as a community in anticipation of the New York session on a daily basis, where we come to review how well our positions are doing and at the same time anticipate new trading opportunities during the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So I encourage you to stay tuned in through to the end of the session so you don't miss out on any of these insightful ideas that we shall be taking on today. And of course, the more time you spend with us, the better you get in understanding how this works and eventually be able to use the information you have gathered here to make your own independent trading decisions. So once again, you are highly welcome on board. Now, the next thing we are going to be doing right now, as usual, is to check on the economic calendar. And for those who have been with us for a while now, you know how important these fundamental factors are, as it often manifests on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that will make us position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. And on the economic calendar, we normally focus on high impact event coming from the economic dockets that affects the assets on our watch list. And of course, for this week, we'll definitely be looking at the United Kingdom and of course the United States economic dockets. So for Wednesday, September 13th, that's today, we had, in fact, we have some event came in this morning from the United Kingdom economic docket, though they are not considered to be high impact event, but it's necessary we look at it so that we can have an insight into what is really going on in the United Kingdom's economy. Now we had like three events this morning, which came with mixed results, as we had the gross domestic product gross domestic product month on month data, which came in below expectations. And for those who don't know, the GDP is considered as a broad measure of the United Kingdom economic activity, and generally speaking, a rising trend has a positive effect on the pound sterling, while a falling trend is considered as negative. And if you look at what the data here came in with, we had a minus 0.5%, which was way below expectation, and in fact way below the previous data, which came in at 0.5, hereby giving us a negative variance of minus 1.40. So this is not a palatable figure at all as regards to the United Kingdom's economy. Then we also had the industrial production, which also came in below expectations and of course below the previous month's data. And of course, this is widely followed as a major indicator of strength in the manufacturing sector. And from what we have here, it shows that the manufacturing sector didn't expand in the last 1 month, which is not a good signal for the United Kingdom. Then the manufacturing production came in beyond expectation on that one, as that came in at 3%, but it's still below the previous data for the month of June. So the data coming in from the United Kingdom economic docket are not really promising at all. So we are going to be looking at how the market participants reacted to this event and how we as technical traders in this community will be anticipating new trading opportunities today. So we also have the consumer price index, which is coming in from the United States economic docket, and this will be coming in about an hour to 2 hours from now. And for those who don't know, this index measures the inflation in the US economy, and of course it also gives us a measure of price movement by the comparison between the retail prices of a representative shopping basket of goods and services. And generally speaking, a high reading is considered as positive, as if the reading is higher, it shows that inflation is high, and if it's high, then there is tendencies that the Federal Reserve is likely going to be increasing interest rate, and if this is going to be happening, investors will want to be betting on the US dollar to take advantage of the yield in return. So we're looking forward to what this data will be, and in fact there is a projection of 3.6% against the previous month of 3.2%. So we're going to be looking forward to what the actual data is going to be like on this one. Will it be just as expected, below expectations, or even beyond expectation? But as technical traders here, what we are going to be doing now is to dive right into the chart, sniff through the current market structure to identify structures and patterns that we can use to guide our independent trading decisions during the New York session today. Now, the first asset we are going to be looking at is, of course, the US oil spot. And in fact, in the last 3 days right now, we have been buying the US oil, giving us a significant amount of profit in that regard. So since the beginning of the week, we had a first position at the breakout of the $86.89 level, and in fact, if you still have your buy position on that move, we're currently running with about 180 pips in profit. Then remember, we also talked about adding more positions here at the breakout of the $87.50 level, and if you did, that one also is running with about 115 pips in profit at this point in time. So we have a total of close to approximately 300 pips running in profit right now. So well done to everyone who has been part of this profitable trade, and you know how we do it. The next thing we want to be doing right now is to move all stop losses to secure this current buy position we have right now. And while we are trying to secure this position, we do want to be given enough room for price action to breathe. And in that regard, I will be suggesting that we have our stop losses anywhere below the $88.20 level, and of course the $87 area. Let's secure this $87.80 area. Let's secure this position while we also give enough room in anticipation of more trading opportunities on this one. So once again, well done and congratulations to you if you had been part of this profitable journey with us. But if you missed out on this opportunity, it's okay. Let's see how we can be part of the next movement in price action for today, especially as we look forward to the CPI data coming up much more later in the day. Now, before we kickstart, let's run through what really happened at the beginning of the week, what led to the idea of us buying this asset, after which we shall come back again to see how to position ourselves for the next move. And to do that, I would like us to run through the higher time frame. Let's refresh our memories as regards to what we saw on the 4 hours time frame. Now, at the beginning of this week, this is what we saw on this chart. We took into consideration the nature of price action since the month of August, and in fact, we have a beautiful ascending trend line after connecting the series of higher lows. And in fact, if price remains above our trend line, we of course want to be looking out for patterns and structures that support the idea of buying that asset. Then in addition to the ascending trend line was these levels we identified here, where we saw price confined within a range since the beginning of this month. That's between the $87.50 level and of course the $85.50 level, to further emphasize the level of uncertainty in the market for the last couple of weeks before we finally witnessed the breakout of the structure during the during yesterday's trading session. We had the breakout of the structure which triggered that bullish momentum to the upside. Now right now we begin to notice that price is caught within a consolidation phase just right around the $88.50 and the $88 area, where revealing some level of indecision at that point in time. And the question that comes in now is that, are we going to be seeing some profit taking activities, as those who had bought the US oil at a cheap price will likely want to be closing in some of their positions, making some profit off that move, which of course will be reflecting on the chart as a retracement to the downside. Now remember, since last week Friday, price has been finding higher lows here, and in fact we have an ascending trend line in that regard to emphasize the strength of the buyers. Now if this consolidation phase we're noticing right now persists, we might likely see some profit taking activity that might incite a retracement, maybe back into the ascending trend line or the $87.50 level, which happens to be our key level for this week, to incite an uptrend scenario. And that's if we look at it closely, and if this happens, we have about, let's see, about a maximum of 100 pips to catch here. Do we want to be part of that move? Well, let's scale down to the lower time frame to talk about that. But before we go down into the lower time frame, I want to emphasize the importance of this key level at the $87.50 area. Remember, we identified this yesterday. What's happening here? I don't know. I think hold on a second. Let's see what's going on here. Okay, I think we are back on right now. So sorry about that. I'm not sure what happened there. So, like I was saying earlier, I want to emphasize the importance of this $87.50 area before we scale down into the lower time frame. Now, remember this level had been a strong selling niche since the beginning of this month, and during the course of this week, we saw the breakout of the structure for the first time in the last couple of weeks to emphasize the strength of the bias. And from a technical standpoint, whenever price breaks out of a structure such as this one, we expect that some point in time price may come back to retest that structure to incite an uptrend scenario. So if that is going to be the case, if we are going to be seeing selling pressure today, then we might likely be looking at the $87.50 level as a potential TB target zone to work with for today. So with the information we have gathered here, let's scale down into the 1 hour time frame where we positioned ourselves for the last bullish move we took advantage of here. Now zooming right into the structure we saw here at the beginning of this week, that price was initially on indecisive, confined within that range before we finally saw the breakout of that structure to incite our first buy position for the week. Now that confirms that the bullish momentum is strong right now as price continues to find higher highs. Now, this morning, while I was trying to decipher what my next line of action will be, I was able to identify another level at the $88.50 level, which also triggered another buy position for me personally. I took advantage of that one, hoping that price will continue to the upside. Now, with the current situation we have right now, we have a new high now, which is rightfully located at the let me see now, let me call this the $89 area, a strong psychological level considering the round figure of that price, as you will see here. And since price tested that area, we saw a sharp rejection, which is normal whenever price finds a new high. There are chances that there could be some choppy situations or retracement when price finds a new high, as it takes some time for price to acclimatize with that zone. Now, the question here, like we said on the higher time frame, is that are we going to be seeing some profit taking activity? As you will see here, that the impulsive move that brought us to this point has gradually reduced. The bullish momentum is reducing somehow, and this is likely going to be a signal that we could be having some profit taking activities go on here, which could come into the trend line or the $87.50 level before the uptrend move happen. So now, if this is going to be happening, how do we intend to capitalize on that move? Now, in that regard, if we are going to be joining any counter trend opportunity here, like profit taking activity, then I want to be looking at the breakdown of the $88.50 level. So to give a visual representation of what I'm talking about here, I want to see something like this: breakdown, retest of the structure, my lower time frame, after which I want to be joining that bearish move to the downside. And mind you that we have the ascending trend line we identified on the 4 hours time frame, and we also have the weekly trend line that we have here. So we are going to be very careful when we join this bearish momentum to watch how price will be reacting to the zones here. So we have a zone around the $87.50 area. That is one area. We want to look at how price will react to that zone, and of course that ascending trend line. And if price breaks down that zone, then we have another zone around the $87 area where we shall be looking out for how price will react to that area, and depending on what happens within the zone will determine what our next line of action will be. Now, if we join, let me remove this ones right now. So if we join a bearish move at the breakdown of the $88.50 level, that is breakdown, retest of structure, as soon as price move in our favor, we want to be moving our stop losses accordingly, secure the position while we wait and see how the market will be reacting to the zone. If we begin to see buy pressure here, then we are likely going to be seeing an uptrend continuation. Then we get ready to be part of that move. So if we begin to see something like a double bottom structure, head and shoulder patterns, inverse head and shoulder patterns, we mark out our neckline, look out for the breakout of structure, then we join that move to the upside. However, if price continues to drop and then breaks down the key level at the $87.50 level, then we look out for more opportunities to maximize the bearish move. Had the retest of that structure, then we join that move all the way to the downside. Then if price continues into this area, then we also be patient, move all stop losses to the entry point at the $87.50 zone. Look out to see how the market will react to that new level at the $86.90 level, and if buy pressure resumes, then we get ready for the uptrend continuation as it may. But if price drops again down to the downside, then we continue to add more sell position to our existing trade. So this is how we are going to be managing selling expectation in this market. And remember that within the sell expectations, the potentials of buyers can never be ignored. So that is why we have these structures that we've identified on the chart. We shall be using as a yardstick to guide any uptrend continuation that happens here. Now, please take note that this is a counter trend opportunity, and it is very important that you be on standby to be able to move your stop losses accordingly as soon as price move in our favor. So that is how we want to be managing a sell position here. Now, in as much as we're looking out for the potentials of a breakdown of the $88.50 level, which could be as a result of profit-taking activities, we cannot ignore the main trend in this market. And in fact, since the beginning of this week, price had continued to find higher highs, hereby increasing chances that we might likely be seeing the breakout of the $89 very soon. Now, in that regard, I want to be capitalizing on an uptrend scenario at the breakout of the $89 level. Now, there are two ways to which we can capitalize on this opportunity, and for those who have been with me for a while now, you know how we do this. Now, for those who have been profitable since the beginning of the week, that is, those who have been buying the US All Spot since we started buying at the breakout of the $86.89 level, we want to be having a buy stop order above the $89 area, and of course we know that we are only leveraging on the profit we had made so far this week, so we can afford to risk some of the profit we had made to test waters around the $89 level and see if price will move and continue to the upside. But if you are new with us and you are coming in from a clean slate, then I will be advising you to wait for confirmations to happen. So once the breakout happens, scale down to your lower time frame, look out for retest of structure, after which you want to be joining the uptrend continuation. So that is how we are going to be managing our positions on the US All Spot for today. And please don't forget that for every move you are making, you want to be having your stop losses in place and ensure you have a stop loss that your emotions can handle. So you want to know if you can afford to risk a 1% of your account size, 2% of your account size, 3% of your account size, depending on whatever you can afford to manage based on your emotions. And please know that every decision we are making in the market is more or less an educated guess. So it is very important you have your stop losses in place just in case price action does not move as expected. So these are my views here on the US All Spot. If you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next asset on our watch list for today. All right. So, in the absence of no questions, I want to assume that we are all on the same page. So, we shall be moving right into the next financial asset on our watch list. So, the next asset on our watch list today is the USTech 100, and in fact, we have an interesting position running right now as we took advantage of a sell position right here yesterday. So, this week has been, we bought at the beginning of the week. Remember, we took advantage of the bullish momentum. Let's run through this quickly and see how the week started for us and what led into the ideas we have taken so far this week. Now, at the beginning of the week on the US Tech 100, we initially identified this range where price was confined within the 15,323 and the 15,288 area to give us an insight into the level of indecision at the beginning of this week. Now, you know how we do it in this community. Whenever we identify a range like this, a flat channel which emphasizes the uncertainty in the market, we want to be exercising patience, waiting for either the breakout of the resistance line for buying opportunity or the breakdown of the support line for selling opportunity. And of course, we never saw the breakdown of the support line, and instead the breakout of the resistance line was what happened here, which triggered our first buy position for the week. And in fact, if you had missed out on that opportunity, the market was so kind, came back to retest the structure, giving us more opportunity to be part of that uptrend move. Then we added more positions at the breakout of the 15,375 as we rode that move all the way into the 15,470 level. I would like to readjust this quickly. That was a typographical error. So we had the 15,470. So for the first one here, we had price move over 150 pips in our favor. The second position moved over 95 pips. So as at the first trading day of this week, we were already over 200 pips in profit on this one before the bearish momentum came in. And remember what I said here yesterday as regards to the setup, that for everyone who is in a buy position at that point, that we want to be moving our stop losses accordingly to secure the current buy position. And if you had done that, you must have been taken out with a modest size of profit on that one. And once again, congratulations to you. Now, during our live session yesterday, while we were trying to decipher what our next line of action would be, we acknowledged the presence of sellers around the 15,470. Now, despite the strong impulsive bullish move we saw here at the beginning of the week, we saw how buyers were finding it difficult to continue to the upside as we saw sellers gradually come in to take out the buyers at that point, hereby giving us something like a reversal pattern in the form of a double top structure, as you will be seeing here. And one of the things I said here yesterday is that we are going to be depending on this ascending trend line to guide our independent trading decisions. And one of the things we agreed is that if price breaks down this trend line, we shall be looking out for selling opportunities. And this is what happened here. We saw the breakdown, and in fact, we saw price come back to retest the structure to further emphasize that we are likely going to be seeing a momentum shift. And this triggered a sell position for us. And remember, it triggered the sell positions around the ascending trend line, as you will see here. And remember that we had multiple levels on this chart that we said we were going to be using to maximize that move all the way to the downside. So we have the 15,375. We also had the 15,323, and of course the 15,288 level to maximize this move to the downside. And in fact, if you still have a sell position right now, you will be currently running with this first move with about 140 pips in profit. And if you are taking advantage of the second position right here, you will be having about 120 pips and then we have another one at the breakdown of the 15,323, and that's about 60 pips in profit. And if you're also taking advantage of this one too, that's about 25 pips in profit at this point. So we are roughly over 300 pips in profit on the US Tech 100 on this single bearish move to the downside. What a phenomenal week it is for us here. On the buy position, we were able to scoop in over 100 to 200 pips in profit, and right now we're having another over 300 pips in profit, making a total of over 500 pips on the first half of this week. In fact, well done and congratulations to everyone who had been part of this profitable journey. Now, you know what we are going to be doing out right now, as usual. Whenever price action moves significantly well in our favor, the next thing we want to be doing is to move all stop losses and secure this current sell position. And from the look of things right now, we want to be having enough room for price action to breathe. So I will be suggesting that anywhere above the 15,315 and the 15,350 area, secure all sell positions within this range. And the reason why we haven't something as wide as that is simply because we want to give enough room for price action to breathe. Now, with a well secured position at this juncture in the market, what is going to be our next line of action for today? Are we going to continue selling the US Tech 100, or is it time to start buying the US Tech 100? Well, to answer that, we would like to scale up into the higher time frame to see what things are looking like from an holistic perspective. And remember, we have the US CPI data coming up much more later today in about an hour or two from now, which will be giving us clues into what is likely going to be happening. In fact, the anticipation of this event is going to be giving us signals on what is likely going to be happening during the event. Now, before we do that, let's scale up into the 4 hours time frame. Now, on the 4 hours time frame, this was what we were able to spot at the beginning of the week. Initially, we acknowledged that price action has been on a strong bullish momentum, so we reduced our focus to what has been going on since the mid-month of August. And in fact, we have a couple of ascending trend line here to buttress the strength of the buyers in this market. Now, in addition to this trend line is a key level we were able to spot at the 15,250. Now, if we go to as far back as the beginning of the month of August, we saw how the 15,250 zone had been a major determinant of price action. So you can see we have the 15,250 around this area. And in recent times, let's say since the beginning of this month, price has been trading most of the time above that level, giving us clues of how buyers are very, very strong around that area. Now, if we look at what has been going on here in the last 24 hours, you will see right now that price is gradually approaching into that 15,250 level. And not only that, it's beginning to find buy pressure around that area. Now, the question going into today's trading session is, will price respect that level one more time to incite an uptrend scenario, or are we going to be having a situation where the breakdown retest of the level will be sending price crashing further to the downside? Then another thing we also buttressed on at the beginning of this week was this descending trend line. Let me bring back the candle chart right here. So we have the descending trend. Let me adjust this so we can capture all the weeks. Okay, beautiful. So we have this descending trend line here after connecting the series of lower highs. Remember, we had some lower highs here since the beginning of this month. And we saw what happened yesterday. We saw price broke out of that trend line for the first time, giving us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And from a technical standpoint, when price breaks out of a key structure, has this descending trend line here, we expect that some point in time price will come back retest the trend line to incite an uptrend continuation. So is this what's going to happen today? Well, we don't know. It depends on how price reacts to this important confluence here at the 15,250 that will determine what our next line of action will be. Now, with this information we have gathered here, you will agree with me that we are at a crucial juncture in this market where, depending on how price action or how participants in the market react to this price zone, will determine what our next line of action will be. So will price retest that structure and incite another move to the upside, or will it break down the structure and resume back into the seller's territory to incite a sell-off? Now, to get a better perspective into what is really going on around this area in the last 16 hours, we would need to scale down into the 1 hour time frame. Now, on the 1 hour time frame, things becomes a little bit much more clearer. Now, the key level here at the 15,250 is going to be playing a major role in determining what our next line of action will be. And in fact, if we take it a step further to extend this ascending trend line that we spotted on the 4 hours time frame, you can see how it shares a confluence with that key level. So let's see what happens here. Let's secure this current position and let's remain patient to see how market participant will react to the zone. Now, depending on what happens here, will give us an insight of what to do. Now, let's look at what we should be expecting. Let's simulate all our expectations around this area. Now, if price comes into the zone and we begin to see buy pressure around this area, then we want to be anticipating an uptrend move to join that bullish momentum to the upside. Now, to capitalize on this bullish momentum, we need some levels that we want to be identifying on this chart. And to do this, I have something marked out along the 15,300 level. So you do want to be marking out these levels on your chart. So let me give this a darker color, differentiate it from the previous levels so we can emphasize its importance at this current juncture we are in right now. So we have something like this, and then beautiful. So you can see how this area has been a selling niche since the later part of the New York session yesterday. So we would like to see price break out of that structure, retest it, and then we want to feel comfortable joining that uptrend move. However, if price gets into this area and we begin to see reversal pattern, let's say for instance we have a double bottom structure, we mark out the neckline, wait for the breakout of the neckline to validate that this is a true reversal pattern, then we can join the uptrend move. So what this simply tells us right now is, if price remains above that key levels, we want to be looking out for patterns and structures that will support the idea of buying that asset. And I trust you on that one. Let's look out for those patterns to be able to capitalize on this uptrend move. However, if price, instead of finding reversal patterns around this area, it drops below the 15,250, that's crucial juncture there, which shares a confluence with that ascending trend line, then this could be a sign that the ascending trend line may no longer have the capacity to continue to maintain that bullish momentum we saw on the 4 hours time frame. And if this happens, we want to be getting ready for a momentum shift, getting ready to add more sell positions to our existing sell trade. So if a breakdown happens, if you're already profitable on the USTech 100, that is, if you have been buying and selling like we've been doing since the beginning of the week, you must have scope a minimum of over 500 pips here. Then you can afford to leverage on the profit we had made so far this week to test waters below the 15,250. So in that regard, you can afford to have a sell stop order below the 15,250 to capitalize on the downtrend continuation. However, if you are new with us and this is your first time trading the USTech 100 with us, then I will be suggesting you wait for confirmations which would reflect on the chart as a retest of structure before jumping into the downtrend move. So this is how we are going to be managing our positions on the USTech 100 today. So I encourage you to remain very patient. Let's allow our structures to mature, and in fact you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So these are my views here on the US Tech 100. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next financial asset. All right, so I see your comment, Safo Sons. Good morning to you. Glad to have you around. 599, good morning to you. Glad to have you around. All right, so in the absence of no questions, I want to assume that we are all on the same page. So we shall be moving right into the next financial assets on our watch list. So the next asset on our watch list is the GBPUSD, and though we have been buying this asset since the beginning of the week, but things are not looking rosy for the pound sterling, especially after a woeful figure coming in from the economic features that came in from the United Kingdom this morning. And in fact, the pound sterling has been under a strong bearish momentum since the beginning of the week. Now, remember that we had buying opportunities initially as we saw price broke out of that descending trend line. We saw price broke out of that descending trend line here at the beginning of this week, giving us a signal that we might likely be seeing an uptrend scenario. Remember, that was the first time price will be breaking out of that structure. So we were of the opinion that this might likely be inciting an uptrend move. However, we also noted that we might likely see price come back to retest that structure, something like this, break out of the trend line, price comes back to retest the structure, as we saw what happened here during the early hours of yesterday into the New York session. As you saw there, multiple buy pressure which lasted about 7 to 8 hours before that momentum began, and since it falls in alignment with our expectation, we took advantage of that buy move, and price moved about, let's see how many pips that was. It moved about 40 pips thereabouts before the bearish momentum came in again. And I hope you did move your stop losses accordingly. If you had done that, you must have been taken out with a modest size of profit, or at a worst case scenario, break even. Now, with the way things are going right now, you will see that in the last 24 hours now, price has been trapped within that range, just between the 1.24940 and the 1.245. Now, besides being trapped within a range, it looks as if that the momentum for this week has established a bearish sentiment. Now, if you look at the structure closely, after price action tested this high at the beginning of the week, just right around that 1.253, we saw sudden pressure resumes, and since then, price action had continued to find lower highs. And to further emphasize this, I connected these lower highs together to give us this descending trend line that you can see on your screen right now. And in fact, this descending trend line here was going to be a major factor in determining what our next line of action would be for today. And of course, when price remains below the descending trend line, we want to be looking out for patterns and structures that supports the idea of selling. But something is interesting is going on in this market. If I zoom out and we look at what has been going on here since last week Thursday, you will see that that area above our key level had been a major buying niche in this market. Now, despite the strong lower highs in this market, we saw that as soon as price got into the zone, sellers have always struggled, as you will see in each scenario. Buyers had come in to negate all sellers' attempts to break through that area. The same thing happened here at the beginning of the week, and right now price is back into that area. In fact, in the last 4, 5, 6 hours now, we have been seeing some buy pressure resume around that area. Now, you will agree with me that we are at a crucial point in the market right now where participants are trying to weigh their options and see how to capitalize on the next move. Now, the CPI data today is really going to be a major factor in determining where price will close for this week. Now, we are at a very crucial juncture, and in fact, if price remains above this zone, I would still like to still consider buying this asset. Now, for me to buy at this point, I would like to see price take out this level at the 1.24940, which also shares a confluence with that descending trend line that you have here. Now, if price can break out of this descending trend line and the 1.24940, then I might start thinking of considering buying this asset because the trend line is broken, and this will be the first time this trend line will be broken this week. If it does happen, and if we are lucky enough to see some retest of structure, it will be a very good area to start considering buying. So I will be looking out for buying opportunities anywhere above the 1.24940 area for today. So let's mark these levels out for buying opportunities. Now, in as much as we're looking out for this, let's shift our focus to the potentials of the sellers in this market. Now, since the beginning of this week, price has been finding lower highs, and in fact, before this week began, we have been seeing lower highs in this market, unless for the fact that we saw this breakout of this trend line happen this week. Now, for me to consider selling here, I would like to see price take out all these buy positions within the 1.24 620 level and the 1.245, which happens to be our key level for this week. So if price can break down the structure, retest, then I will want to be considering selling the GBPUSD for today. So it's a simple setup we have here. Let's see how the market reacts. I would implore us to remain very, very patient, waiting for the structures to mature before we jump into any positions here. Now, our center of focus for today right now is going to be, hold on a second, is going to be within the 1.2490. So you do want to be marking out these levels on your chart, and of course the 1.245, wherever the breakout or breakdown happens, will give us signals of where we shall be heading towards for today. So let's see how this will play out, and I hope that you'll be on standby to capitalize on that move. So these are my views here on the GBPUSD. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, so in the absence of no questions, I take this as a confirmation that we are good to go and we're on the same page. So in that regard, we shall be moving right into the next financial asset on our watch list for today. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, we have an interesting situation going on right now. And though the week started on a negative start for me, as I bought at some point, remember we had a buy zone identified around that 1,923 and the 1,921.50. This was on Monday, where we were looking forward to the end of the retracement of this impulsive move to join that uptrend continuation. But unfortunately for us, we had a buy position triggered and price just went all the way down, taking us out of that position in a loss. And during our live session yesterday, we anticipated the breakdown of the 1916 to capitalize on a bearish move, and in fact we saw our price took out all the buy positions within the zone to incite that downtrend move. And in fact, if you took advantage of that move, well done to you for being on standby, as if you still have your sell position running right now, you will be in about 50 pips in profit at this point in time. And in fact, since price has moved well in our favor, you do want to be moving your stop losses right now to secure this current sell position. And for you to secure this position, I will be suggesting that anywhere around the $1,915 level, which happens to be our key level for this week, is a suitable area to move your stop loss to and secure this current position. Now, with a well secured position, and as we are in the mood in anticipation of the US CPI data today, what is it that is likely going to be happening? Are we going to continue selling the XAUUSD, or is there chances that buyers could come in? Is there chances that participants in the market will see this commodity as cheap enough to start buying, or are we going to be having a data that will project strength for the US dollar? Now let's look at the structure from a technical standpoint. Now the first thing I would like to do here on the 1 hour time frame is to acknowledge the momentum for this week. Now, though we started the week started on a strong bullish momentum, but since price tested that high around the 1928 zone, we begin to see price nosedive to the downside and along the line forming lower highs in that regard. Now, if we are going to take a step further, the first thing we are going to be doing is to acknowledge this by connecting the series of lower highs, and when you connect that appropriately, you will be having a descending trend line to work with for today. And of course, hold on a second, let me readjust this. I think it's not capturing. I need to adjust this so you can capture all the pivot highs here. All right, so better right now. So we can see here that we have a descending trend line, which of course we are going to be using as one of the parameters that will be guiding our trading decisions for today. Now, as you know how we do our descending trend lines here, if price remains below the descending trend line, we shall continue to look out for patterns and structures that supports the idea of selling. Now, if you look at what has been going on here in the last 24 hours, we have noticed that despite the lower highs in this current market structure, we have seen how it has become difficult for sellers to break through the 1909 in the last 24 hours. The same thing also happened during the early hours of today, as we continue to see buy pressure negating all attempt by the sellers to break through that area. And if we look at the structure closely, it appears that price action is gradually transitioning into a reversal pattern in the form of a double bottom structure. Now, if we take into consideration the impulsive move that brought us into this point, we saw price go to as low as the $1,907.50 area, and we saw price climb back into the $1,913.50. Then it came back again during the early hours of today, and the inability of price action to break through the previous low is a sign that we might likely be seeing a reversal move. And if this turns out to be like this, then we will be having a reversal pattern to work with for today. And whenever we identify such reversal patterns, the next thing we want to be doing is to identify the neckline that we shall be using to validate that reversal move. Now, to do this, we have something around the $1,913.50 level, which shall be helping us capitalize on a reversal move. So what we are going to be doing here is to exercise patience, waiting for the breakout retest of the zone for an opportunity to join an uptrend move. Now, if this will happen today, then we are good to buy anywhere above the 1,913 area. And if this continues to the upside, breaking out of that descending trend line, then this will further emphasize the strength of the buyers in this market, hereby welcoming more opportunities to maximize the potential of that bullish move. So we want to be on standby right above the $1,913.50 level to capitalize on a bullish move. Now, there is a caveat to this current structure which I would like to emphasize here, and you want to be taking note of this. Now, remember that we are at a crucial juncture in this market here, as this zone here shares a beautiful confluence with that descending trend line. And don't let us forget the fact that price could come here, retest it, and then nosedive to the downside as a trend continuation respecting that descending trend line one more time. So this possibility here cannot be ignored. So because of this expectation here, if price breaks out of the neckline and climbs into that area around that trend line, let's ensure that we move our stop losses and secure the current buy position, as depending on what happens around this area will now determine if we are going to be adding more buy position to our existing trade or getting ready to sell. So we said earlier, a breakout will welcome more buying opportunities here, while price setting pressure around this area could incite a sell-off in this market. So let's keep this in mind while we continue to monitor price action here. Now, in as much as we're looking out for potential breakout of the structure today, don't let us ignore the potentials the sellers have, as this momentum here since the beginning of the week has been bearish. Hence, the breakdown of the 1,909 could incite some selling opportunities. So you do want to be marking that level out too. A breakout retest will be welcoming the idea of selling that asset around that zone. So these are my views here on the XAUUSD for today. It's a simple setup. Let's mark out these levels on your chart. Very important is that descending trend line, and the neckline have the reversal pattern situated at the $1,913.50 level for buying opportunities. So let's see what happens here, and of course we shall be back here tomorrow again to review how well this asset has been doing. If you have any questions whatsoever as regards to my illustration so far today, feel free to let me know in the comment section, as I am willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today. All right, so in the absence of no questions, I want to assume that we are all on the same page. So well done, guys. It has been a wonderful moment with you here this morning, as we were able to take on 4 major financial assets on our watch list this week, which include the USOILSPOT, the USTech100, popularly known as the NASDAQ. Then we also have the GBPUSD and of course the XAUUSD, popularly known as the gold spot, all of which we were able to identify simple setups using trend lines, key levels, and chart patterns to gain valuable insights, and at the same time help us to position ourselves ahead of the New York session today. And I do hope you are able to mark out these levels, as we are going to be using them as a reference point to guide our independent trading decisions. And remember that you want these structures to mature before we jump into any position. So for those who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, the more time you spend with us, the better you get in understanding how this works and eventually be able to use the information you've gathered here to make your own independent trading decisions. So I look forward to seeing more of you tomorrow as we come here again tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, as we come here to review how well these assets have been doing and at the same time get ready for tomorrow's trading session, which also promises to be an exciting and insightful one. So it's on this note, I wish you all the best of luck for today, and I hope to see you tomorrow. As always, do have a wonderful evening, everyone. Bye bye.